Hello trader, my name is Wasku Smart. Welcome to Wasku Smart YouTube channel. So today's topic we'll be talking about the institutional market structure. So whereby we'll be looking at more advanced strategy. You know, our just concluded series that we just did, where we are talking about the gold strategy. So today on also we make use of more advanced um, price action for gold strategy, and we'll be making use of gold and other currency pairs. So but today let's use at JPP odd. Okay, this strategy we are trying to talk about, our only focus on this strategy is just on both the tops and the highs, so which means that the tops and the lows. So what you are trying to do is that on this strategy we'll be making use of um the price actions and the market structure purely on the chart, so which means we have nothing else to use on, no other things, just the market structure. We are not sensitive about the time anymore. We are not sensitive about the time, but we are only using a pure market structure. So this is how it goes. As I always said, most of my every strategy, I always say that for every strategy you have to use, you have to understand the market, the current market narrative. So which means that you have to know what market is doing and what market wants to do. So whereby you make use of, and is either market want to take out a liquidity or market want to close an imbalance. So you have to make sure that we understand these two things before we use this strategy I'm about to show you. So this strategy will also be in series as we start today. So let's first show the patterns and the things we have to come together to put together to make this strategy a whole one. So let's get started now. Okay, on this strategy now, our major focus is just the market structure, but the institutionally aspect of it is that for you to trade this market, or for you to trade this strategy, for you to make use of it, you have to make sure that you understand why market have to do that. So this the responsibility on your own shoulder. You have to understand why market have to do what market want to do. So whereby maybe on the higher time frame, market traded into a fair value gap, a order block, or market took out liquidity on a higher time frame. So you know that, okay, when market took out a liquidity on a higher time frame, the next thing for market to do now is that market needs to go up, retrace, reverse. So things like that will give you a perspective in the lower time frame why you should trade for buys and why you should trade for sell. Do you understand? So now for today now, I will only imagine that you have got your institutional reference point. So for this strategy now, it will give you an edge, a high confidence for you to go into the market um forcefully. So now let's start. And for this strategy now, we make use of 15-minute time frame and 5-minute time frame. That will be your entry point. If you don't see it on 15-minute time frame, you have to go down to your 5-minute time frame. The higher the time frame, the stronger the entry point. So now let's get started. And on this strategy now, I'll be drawing out the chart. Okay, let's say okay, let's say we have this. Let's say we have this as our point of reference on higher time frame, and when we saw market coming to it, we saw what market is doing. Now market took out the liquidity. So when market took out the liquidity, I will just not be a buyer. I will not just be a buyer because market took out a liquidity on a higher time frame levels. What if market continue going down after me buying from here? So this is what this strategy is all about. It will help us to maximize our losses in a reference level point. Do you understand? So let's see now. This is how the strategies work. The strategy is just about me having for my buy now, me having a short time low, and in the middle of it I have to have something called the intermediate time low. So now let's use this as example now. Let's say as market goes here, the market come back here. So now as you can see it now, market is still bearish, right? So market goes up. The moment market took out this high, here, it confirms to me that market is bullish. The moment this high took out, so which means that I have a short time low here, a short time low here, and a short time low here. So I have a short time low, and in the middle of it I have something I called the intermediate time low. So this is the important thing here, is that I don't want to see market coming down to this low anymore. So market should not come down to this low anymore. So, and because market took out this high here does not mean I will be a buyer like that. So I have to look for a reference level like a fair value gap, any other source of um any other source that I can look for here as my entry point. So let's say we have a fair value gap here now. I have to allow market to come down back into the fair value gap, then and go up. So that is a logical aspect of this strategy, and that is what all this strategy is all about. That's what it's all about, rather. So now let's look at it on chart now. So I have to delete all this. So yeah, okay, now this is the chart here now. So you all can see what is there, right? This line here that we have here is a higher time frame liquidity zone, which means that a higher time frame low on the daily chart, a low on higher time frame. So I saw market being bearish. I saw this low here, market goes back. So you see now, if I would have been a buyer here, I would have been like just the way the retail trader do it, just the support level buys there, and you see market comes back again. So now this is where the issue comes in, and this is where the strategy comes in now. I saw this low here, the market goes up, then goes back here, it took out this low. Now this high here did not take out this high, the market will trace back. It seems as if market want to continue its bearishness, but market goes up. So at this point here that I found this bearishness, that I found this break of market structure, I will call it what? At this point here, we have a market structure shift. So which means that market is being bearish all the time. But when market got to this place, note me why I have a reason why market have to go buy. Don't get me wrong, because market took out a liquidity on higher time frame. So which means that market have to retrace back in range. Market have to retrace back to the range. And I found a fair value gap here on 4 hours time frame that market have to close. So that is the reason why I look for this strategy. So the next thing is that when market structure was shifted, I look for this fair value gap here, then this fair value gap here, then I call it a buy. So that is what I bought. Then my liquidity below the ending of time low, then that is it. But let me noted it back here. So we have short time low, We have a short time low too. The enemy of time low, the market blast. So let me show you on my this thing. So I took the trade here. You can see it here. Before it pans out, this is it here. You can see short time low. Yeah, so you can see it here now. We have the short time low, then the fair value gap, market coming to it. So so you can see it here. The trade played out very, very fine. So down 96 pairs. So and this is it here. You can see how it plays out. No, now let me show you gold owns so that we can check it out from gold chart also and see that it also works on gold. And we'll be um the next episode we'll be talking about gold straightforwardly. So which means that we'll be focusing on gold. But let's see just for our facing views on gold, how the strategy work on gold also. So let's see. So I'm going to put it on gold now. Let's see 15-minute charts. So this is gold here, 15-minute chart. You can see this low here. You can see market comes down into the higher time frame liquidity level. So market took out the liquidity. Then market moves straight forward into a fair value gap up. Then comes down again. Then goes up. The market did not take out the lower low. You can see market did not take out the low. So we have the short time low beside of it, short time low beside of it, and the intimate time low beside of it. The market break a structure, then come back into a fair value gap. You can see how it displays up. So that displacement up is what we are looking for, is what our target is. So you can see how market plays out well on gold also. So the next episode we'll be talking about more on gold, how you can combine time with the institutional market structure, and you can see how it works with both. So like, share, and subscribe. Thank you. We see you next.